Hey, this is Matt from InvestiQuant. Today is Monday, January 11th, 2021. And last week was a strong week for the markets. We ended up pushing higher the majority of the week, and on Friday we closed right at 52-week highs. So we continue to move higher along in the markets. This morning, Monday morning, we are seeing a bit of a pullback as we approach the open. So what I want to do here today is look at what has happened historically when you're gapping down on a Monday following a 52-week high close. So last week closes strong. Monday starts the week with a gap down. So let's go ahead and set that up and discover looking at all four instruments. The setup's going to be based upon entering the market long at 9:30 a.m. Eastern Time and exiting at the close, which is 4:15 p.m. Eastern Time. Next, I'm going to go into the opening filters and add this piece of information where we are opening below the prior day closing price. So I have added a gap down here from the gap direction category within the opening filters section. And next, I want to go into the price patterns library, and I want to find that pattern that says that the prior session closed at a 52-week high. That's going to be in this new highs category. I can either scroll down here and find it, or I can grab it from the active today, but it is right here. So I'm going to go ahead and hit equals next to that. That'll add it to the test. And then lastly, I'm going to go into the calendar library, and I'm going to say that it's Monday. So I'm just going to hit equals here next to Monday. I could also just grab it over here on the active today section. But this completes the pattern that I'm wanting to look at here, which is based upon gapping down on a Monday following a 52-week high close. Now I can hit view results. And here we go. These are the results of going long at the open, which is 9:30 a.m. Eastern Time, exiting at the close, which is 4:15 p.m. Eastern Time, when you gap down on a Monday following a 52-week high close. Historically, the S&P has 59 samples of this pattern taking place dating back to 2003. The NASDAQ has 35, the Dow 42, and the Russell 32 samples. So this happens more frequently in the S&P than it has in the other instruments. If we look at the win rates on these, the S&P has been a little bit more favored on this day. So we got a 59% win rate here. So 59% of these have closed above the opening print, which would be a green daily candlestick has been formed on this day. The NASDAQ has fewer samples, 35 samples, but of those, the strongest win rate of the group, 71% of those have closed above the open. The Dow is the weakest of the group, coming in at 43%, and the Russell coming in at 63% of those closing above the open. So out of our four different instruments, three of them have leaned to the long side on this type of pattern, the Russell being the one exception that has not. If we look at the average win and average loss, you'll notice the average loss a little bit bigger than the average win in the S&P. That is not the case in the NASDAQ. The NASDAQ's the one with the strongest win rate. It also has a better average win compared to its average loss. And then if we look at the Dow and the Russell, both of those have a little bit larger average losses than average wins. So 3 out of the 4 instruments have larger average losses than average wins, and 3 out of the 4 instruments have better win rates compared to losses. So 3 out of 4 have leaned to the upside, but 3 out of 4, when they are wrong, have had bigger moves to the downside. So hopefully you found that helpful. Good luck today, and we will see you next time.